The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here, and checking out what's going on in the market today. We got some pretty interesting things happening with the Fed. They are pumping, and you go, oh, that's not news. Oh, no, it is news, actually. They pumped an additional $40 billion. And so we're going to talk about that here in a little bit. We're going to go into the detail, but this is on top of the $45 billion that they're going to do this month anyway, and on top of the $40 billion they're doing in the mortgage-backed securities. So I mean, it is just like we've never seen this before. It's insane, and we'll go into, like I said, we'll go into some more details on that. But right now, let's go ahead. Let's check out what's happening in the markets, what's happening with the news, and what we can do to take advantage of all these trading opportunities. Right now, if I go over and look at the news, there's been a few things beyond the Fed pumping that's been happening. The pound had its current account come out. It was actually a little worse than expected. Unemployment claims came out this morning a little better than expected here in the U.S. Pending home sales were a little worse than expected. Hence that drop that we saw that actually helped with the gap fill. Gotta love the gap fill trades. And so I don't know if you've played the gap fill trades before, but it's one of my favorite ways to trade. Nadex, one of my favorite trades, period. But I love it on Nadex because it affords me the opportunity to be able to go in and play a gap fill without having a stop loss. And I've been doing several of those lately, working really, really well. And again, it's one that I use actually quite a bit. And there's just been a lot of really, really good setups. So the only one that's not going to fill across the board is the NASDAQ. The other three filled. They made great profits. And you could either close out the NASDAQ trade if you wanted to, or if you left it on. I mean, it was like a $5 risk. I mean, it was a really, really big gap fill on the trade overall. So pretty impressive there. And let's see here. Let me pull up the current news for today. Like I said, okay, pending home sales came in at negative 1.6% on an expectation of negative 0.9%. And so that's obviously just not good news for the economy. I actually didn't expect to see the gap fill at first. I was doing this trade with some other traders. We were looking at it, and so I was sort of hesitating. I was like, well, let's get ready. And then, right as that news came out, we got negative pending home sales. Then all of a sudden I started seeing the market tick back. And I'm like, okay, that ought to give us at least, a solid, somewhere between 15 to maybe 30 minute or so pullback in the market. And because that was quite a bit worse than the expectation that was on the table there. And so then at that point, I was then able to hop in and go short on the binary contract. And let me see if I can pull this up. I'll show you, one, what the gap fill is, and then two, what I'm talking about on this trade. But let me maximize the grid sell over here. Okay, so we go in. We're going to break this thing down to 5 minutes, and then we'll do is we'll pull what was the you want to know settlement price, by the way, not close on your chart, but settlement. So we pull the settlement prices from the exchanges. So on the S&P, the ES contract down here, you have a settlement price of 1685.75. So I went in on the 1686 contract. But if we go on down to 1685.75, so right down here, okay? And so that's basically the price that we were targeting this morning. And that's from basically yesterday's settlement, which is a little bit different than if you're looking at the chart, for the close. And so I'm going in, I'm targeting like 1686 strike. So we're getting, really, really close over here. And I seen the market shoot up. I'm like, we have a gap, but the market's going up. And the Fed did another bond purchase yesterday, and by the way, they just did another one today. Okay, and And so that's why I was hesitant first thing. But then all of a sudden I see this negative home sales report come out. And I'm like, I think that's going to do a pullback. And then I start seeing market noise light up negative. And, when I start the trades out there's a lot of things I'm looking at once. When I see that light up negative and start going south, then I'm like, okay, it's time to hop in on this thing. And we're talking like hopping in like right around $90, like $85, $90 on the trade. And if you don't know what a binary is, with the binary, basically the maximum value is $100, and you can play inside that value. It's a probability trade. And so I'm going, okay, it's going to go down to 1686. So I choose 1686. I have till 4:15 for it to get down there. I sell it for basically, $90. We can pull up the exact trades, but pull it for $90. And let me see here. I'll get you the exact price that I got filled out this morning. Put a lot of them in. We got the S&P. So the S&P, okay, we got filled for 84 on the S&P. We got filled for like 89 on the Dow. But I was doing them across the board. So the S&P I sell for $84, and on a binary, you can know that when a market gets to the strike of a binary contract, that binary is going to be worth $50 because there's a 50-50 probability that it'll still be there at expiration. So whether there's like 5 days, 5 hours, 5 minutes, if the underlying market's at the binary strike, it's going to be worth $50. You give or take a few bucks for bid-ask spread, and then also you just have the reality that not only the bid-ask spread, but also you add in a few ticks just in case it doesn't quite hit it. Like in this case, we got just a few ticks off of actually truly filling settlement. And so I don't go for 50, and I don't go for like 53, 47. I do 57, 43. So if I sell, I'm going to buy back at 57. If I buy, so I get 10 or 15, I'm going to sell out at 43. I don't wait until expiration. Okay, I'm not looking for like a over-under binary bet on technical analysis alone. I mean, if I'm going to do something, if I'm going to do like it's going to expire above a price and I'm willing to hold it, then either I'm doing a premium collection trade within 5 minutes, or I'm doing a very high statistical probability seasonality based trade. So on this kind of trade, I expect it to do a price. When it gets there, I'm getting out. And often I would expect it to bounce. It did bounce. Okay. And the other thing is, again, we had bond buying happen again today, and we had it yesterday. So once the negative news had its little heyday with the new home sales, all the extra, and this is not the QE that you're normally used to. This is not the 85 billion. All of the extra drop in the market also didn't matter. Bonds kicked in, messed with the whole risk aversion model. Price pops up right off of it, but we're actually able to get filled at 57. If I would have waited for 50 or 53, I probably wouldn't have got my fill. So if I go in and you do the simple, very simple math, okay, and you sell a contract for $84, you buy it back for 57, you make $27. Okay, you're risking $16, so you made a 168% return on the trade. And from entry to exit, it looks like we had, let's see, how much time did that take? Got in at 10:37 for $84 I was filled, and let's see, I got filled on the exit to buy back at 57 at 11:03. So we're talking basically 30 minutes, not even quite 30 minutes, to make a 168% return on a trade that had defined capped risk of $16, and I had until 4:15 for it to come back and hit settlement. So a very, very cool way to be able to, trade a gap fill. And I noticed some of the traders posted in the den a bunch of stuff about the treasuries test the lows on the auction and the disappointment and everything else, but it doesn't matter. They're coming in, they're interfering with everything. So it's really interesting watching. I mean, it's sort of annoying, but watching the Fed interfere and, like I said, just taking the whole thing with, how it's. We expect that move up. So, again, the move down came from, so this is where fundamentals come in. It's not that you trade the fundamentals, you trade the chart, but you're you're mindful of the fundamentals. And so, I didn't go short yet because you know what the chart told me? The market's going up. And so I wanted to play that gap fill right on the open. It's like, boom, it popped up. I'm like, you know what? I got about 6 points in there. I could get a 1-to-1 risk reward. I held off on the trade. I didn't take it immediately because the chart was going up, okay? But then I saw the broad market index turning over. I saw all the indices starting to turn over. I look at the fundamental news report. It comes out negative, so now we have a reason for it to turn over. Again, a reason doesn't mean it's going to, but a reason does help accelerate it when you see it. When you see the technical analysis showing it, and you see there's a reason behind it. It's not just order flow moving back and forth. It's not just general order flow. Like there's actually a fundamental thing pushing it. And so it's like, okay, we have a reason and we have a turnover in the trend. This actually has a reason to last a little bit longer. And then we have a gap fill. So we have a bunch of orders that haven't been filled down there on the stock market. So that's going to pull everything together to bring together the indices and stock market, the futures. So let's go in. Let's grab that gap fill. We grab it. Gets really close. We get out of it because almost all gap fills bounce. And then you add in the bond buying program on top of it. And, it really makes for a perfect trade. And so if you haven't started playing with that, hop on over to TFNN's website, okay? Click on the Nadex banner on the right side of the page. All right, so right over here, TFNN.com. Click on the Nadex banner. And then just to demo trade this, hop on trading and then click on demo trading account. And once you click on that, fill in your username, your first name, last name, phone number, email address, click apply for demo. And that'll let you apply for the demo. You'll actually get, within a few seconds, you'll get an email with a password so that you can log in right away to be able to access the Nadex platform. And you can do things like these gap fill trades or like the premium collection trades that I'll do, things like that. You can start playing with them. So that's your first step. And you can also fund an account. If you'll fund an account, you'll get an extension on the demo there. But fund the account, click create account, and start to fund. It takes about 5 minutes. The minimum funding requirement is $100. The trade I did this morning, $16 a contract. One of them was $5 a contract is all I had to put up. So you can do 1, you can do 10, you can do 50, you can do 100, whatever. But you can actually trade with a small account. And it's just a very cool way. You're not worried about. I had no worry about stop losses because my trade was my stop, and I was playing a very common trade, which is known as the gap fill trade. And of course, I use additional analysis. I'm using diagnostic analysis, and that's why it's called the Diagnostic Trading Hour, because we're looking at fundamentals, new home sales. Okay, we're looking at statistics, deviations. Okay, we're looking at seasonal analysis. So basically what happens is in the morning it opens up, and the seasonality is it will actually fill that gap in the morning. It's very normal. Like majority of gaps fill in the morning on the indices. And then we were looking at the technical analysis. We were waiting on the chart to turn over before we hopped in on the trade. And by putting those 4 pieces together, we were able to be a step ahead of the markets. We were able to capture a very large profit and able to do it at a very low risk by using the binary contracts. All right, we'll be back in just a little bit. Stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so just walking through how to get the demo and live accounts. You can do trades like the trades that I was talking about earlier today about the gap fill trades. And, of course, to learn even more, you can hop on over to TFNN, and you can hop on their website, TFNN.com, and then scroll down over here in the slider, and you'll be able to see the Diagnostic Box Spread Analyzer. Click on that. You can get free 2 weeks access to everything in there, include the tutorials on the binaries, tutorials on the spreads, the binary scanner, the spread scanner, and the deviations. And then sign on in. Once you got it, click on over to it. You go to the box spread scanner. Again, the binary scanner is included now free with it. And, you can do things like premium collection trades. So premium collection trade example would be, we'll see if there are any at this point. We start a little bit late. 65 to 95. I'll bring it on down to 15 minutes to expiration. Pull up gold and silver. Looks like we do have a potential premium collection gold trade at 13.22, expiring here in the next 4 minutes. So I'll pull that up and look at it, see how much distance do we got. Gold is at 32.36. We only got 3 ticks. There's not a whole lot of room on that trade. So I'm going to be probably going to hold off on that one. So only 3 actual ticks on gold. That's not enough room to justify the risk. It may work out to be a great trade, but it's just not my trade. And you want to be careful that you take the right trade, the trade that's going to work out, that's going to be what you need. And let's go ahead. Let's check out where the markets are at right now. Let's get a current market wrap, get caught on up on things. We got quotes right now. We got the S&P is up 7 points. We got the NASDAQ up 31. The Russell's currently up 6, with the Dow up 52. Gold's currently down 13 points. We got silver is down 0.5%. Copper is currently up 1%. Oil is up 21 cents. Natural gas is, believe it or not, flat on the day. And looking on over at corn, corn is also flat on the day, and meaning no change. We got soybeans right now is down about 5 points on the day. We got euro dollar down 44, pound dollar down 59. Aussie dollar is currently down 22 pips. Euro yen is up 15. US yen is up 47, and pound yen is up 33. We got dollar CAD also flat on the day. Dollar franc up 23. So a lot of battles going on. A lot of flat markets. We saw all the markets run up this morning before the new home sales and run on back down, and then getting pumped and primed on back up with all the Fed intervention. And let me see if I got this over here. I may still have it up. If not, I'll grab it in a little bit. We got a chart we're putting together for that shows the Fed stuff. Let's see here. Try that. See if that'll work. If it does. Then, if that one's opening up. There we go. Yeah, so here's the Federal Reserve. A little screencast right here for you. And showing you $40 billion right there. $40 billion purchased on the temporary. So what am I talking about when I say temporary? Let's look at this. If you go to the New York Fed's website, under open market operations, you're going to have your permanent. Okay, your permanent operations, that's your schedule for the $45 billion in Treasury securities that they're doing. Okay? You have the other $40 billion in mortgage-backed securities that they're doing. Under temporary, okay, this is anytime, any place. And the only way to know about this is to basically set up an email alert and set your email alerts up to go to text message or to pop up on your phone or whatever, like with the Gmail app. Appreciate Stephen for helping me out with that. And you can make it alert on your phone so that way you know when this happens. And they'll release it right around 11:45. It'll go out. The deal date being today, maturity date will be tomorrow. We'll see a big impact on that. So it keeps happening day after day. And it goes, okay, well, that's not a big deal. They're doing that. No, this is in addition to the other $85 billion. This is another $40 billion. Little typo in there, but another $40 billion that they've done. Look at this. We had $15 billion in August. Okay? We had like $8 billion total right there for the previous 17 months. Okay, before August. Right there, $8 billion. 15, 40. We basically have done more in the last few days. The Treasury's done more in the last few days than they have in the last basically year and a half, 2 years on these temporary market operations. I mean, it's just out of control. And yeah, you can click on Show Last 25 Operations, and you can actually see the detail of the bond purchasing. So this is, I mean, if you're a bond trader, you better be aware of this, right? So really, if you're trading much of anything, you better be aware of it. And so right there, I mean, just a massive impact. So we'll go into a little bit more detail, and we'll look at some charts on how this impacts your trading when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, so it's Darrell Martin right here on the Diagnostic Trading Hour at TFNN, and we're checking out. We're talking about this whole Fed stimulus thing that's going on, and beyond the quantitative easing. And when you look at it, if you hop over to the New York Fed Reserve's website, you go to operation markets, and you go to temporary operations, you'll see this is the short-term repurchase and reverse repurchase, a.k.a. repo, agreements used to affect the size of the Federal Reserve System portfolio, day-to-day trading. Basically, it allows them to go in and do whatever they want to. And so see announcements from September 20th, despite indicating multiple prices below. This is a fixed-rate operation. There were 55 bidders at today's operation. On September 23rd, there were 76 bidders. On September 24th, there were 75 bidders. On 25th, there were, on down the list. So, anyway, so they're telling you how many people are participating in the bidding wars and all that stuff. But it's a fixed rate, okay? But it's repo. Why all the repos? What's up? Well, there is one piece to this. This is a way, CNN actually put out a decent article on Fortune website here. I just posted over there that did for you. Actually put out a decent article that talked about basically they're trying to figure out how to boost the interest rate, okay, due to the whole QE thing. And so part of it is that they're going to use the repo market to basically force the interest rates to rise. So we'll see if this works or not. But that's actually why they're doing this. They're trying to make the repos increase more. So it's sort of weird. What they're doing is they're transferring the problem from one sector, the housing market, to the other sector, to the bond market, to now the repo sector. And so like every exit plan becomes a problem for another sector. And it's like they just keep extending, the issue. But now they're going like, well, now we've blown up this neighborhood. Let's go blow up that neighborhood now. And maybe that'll fix the blow up from the last neighborhood. But basically, the whole idea is they're going to need, to rein in the repo market. So they go in and they blow the repo market out, doing $40 billion in a matter of, just this current week. And, is this going to affect General Electric and other companies that rely on money market funds? And so it's a really good article right there on CNN. But it sort of explains the interest taper or something that they're trying to do here. I mean, it's a really weird way to do it. But basically, repos, they affect the short-term interest rates, and it'll make people have to pay less to the Fed, but they'll have to end up paying more out of the market. And so this is instead of having to raise the interest rate. And it's a little bit complex, but the bottom line is that's why they're doing it. So there's two reasons. One is, of course, it does have a bit of a pump because by keeping that interest rate low, it does, give a little bit of a risk aversion. People pop into the equity markets, props it up, like when you're worried about, budget shutdowns and bad news and everything else. That's one reason. The other reason, this is a way, and right now I think this is the only reason, the biggest reason, more than just propping the market, they're actually trying to force up the interest rates. So, in their weird way of doing so. But they're going to make sure they end on a high note one way or the other, right? So when Bernanke walks out, he's going to be like, it's all great. Somebody else is going to mess it up. So, but I think that's pretty much the way it's going to play out. Anyways, but how does that affect you, right? Because that's what really matters. At the end of the day, it's your trading, and it's affecting your market. So what you want to do is I posted that chart over there on the DIN for you so you can take advantage of that. You can look at it and pull up what you trade, whether you trade bonds or Forex, or maybe you trade, whether you're trading the equities or you're trading the gold markets, things like that. Go in there, pull those charts up, and look at the day of and the day after, right there in the afternoon, right around between 10 and about 1 o'clock, okay? And look at the size of the purchase, and then start comparing. You'll start seeing some patterns, okay? So you do a little homework, all right? So use that posting up there, and just start looking at what's happening. Now, also, bring up a news calendar, like Forex Factory or something like that, next to you so you can see what's going on. But like today, okay? Right around 10:15, we start getting a little, right there, but it fell. Well, this is a little bit odd. Usually it doesn't fall right around 10:15. Usually we get a rise around 10:15, right? Except for we had new home sales come in negative, and then the repo kicked in. Part of this pump is not to make the market fly to the moon and beyond. It's to prop, okay? That's the whole point. Prop the market long enough to get people unafraid so they start spending money again. That's the theory. And the world goes round and round, and then you can start, you don't have to sell it because they're never going to sell. They've already said that. They're not going to sell these things off. They're just going to let them all go to fruition, and they just pay all the profits back to the U.S. government anyway. So if that's the way it works, then all they're trying to do is prop it. So if they can keep it right around settlement, a little above it, a little below it, then it worked. New home sales comes in, that purchase order, boom, comes out, market starts flying on up. When does this get released? What time does it get released? Okay? Well, you can check it every day. It's not really worth checking every day, except for maybe this week. Most days, though, it's not worth it. It comes out at around 11:45. You're going to see it about 11:47 in your email inbox. Okay? Eastern time there. And so you can go over here and you can sort of look at it and see, okay, right about here, we start seeing it, and then the market does a little bit of a bump right up there. They're just trying to bump up the market, but be aware this will have an impact around 10 and 11 o'clock. You'll see an impact in the market. So one of my trading systems that I use actually is based on the 11 a.m. time frame, and big part of that is due to how they do the bond purchases every single day. Like if you go over here and you look at the permanent bond purchases, right there, and it'll show it, if we look at, like, say, today's, okay? Operations, look at when it happens every day. It closes at 11 o'clock. So I actually have a trades that I do based on exactly that 11 a.m. time frame every day. and because that has a massive impact on the market. I don't know when they stop QE, I'm going to have to figure out what kind of change we got to do. But it's been working really well, and taking advantage of that. So, but there's just been some major market operations in there. So we can go over and we look at, okay, well, that's today. What about previous days? Because these last few days we've been having this go on. And make sure you go back and, look at it. Like I said, do your homework. And this is a little seasonality thing, okay? Where the market, it's a fundamental thing because it's, Fed buying, but it's also seasonality because of what time of day it happens. And so right around 10:15, boom, it pops out. That's when they start the auction up. It keeps going. And we see them move right to about 12. Nice little run, bounce off the half deviation. A lot of things lining up for you. Hop on over. We had another one the day before, okay? And we go through and we look at each one of these, and we can see, same thing, 10:15, boom, pops right on up till about 12, and then we get a little oscillation for the rest of the day. It pulls back down right there. So day before, we didn't have one. Okay, it came out, but we didn't have the maturity and the settlement and all that stuff, and so we didn't even see an impact on it. But still, if you go look at it, you still had a little bit of a bump right there, right around 10:15. And so you can go back and you actually see, this is actually having a massive impact right around 10:15 on the market. Today was an exception due to the news that came out that was negative. It caused a drop down, but then we got a bump right back up off of it. So I was looking for it, and I was like, I don't know if I'm going to do a gap fill. That was my big hesitation this morning because it was heading up, and I'm like, I don't know if I'm going to do a gap fill at 10:15 because we had another big bond purchase yesterday. But then all of a sudden I see it turning down. I see the negative news. I'm like, okay, we're going to get that gap fill, and we're going to get out. And it goes on down. We get out, and then the thing pops right back up off of it, just like clockwork. With all this bond buying happening. So, as far as an exit plan, the exit plan would just be a question over in the den, would just be tapering back, like buying less. But as far as exiting, they don't have to do anything. They've actually said they will not sell back these mortgage-backed securities and dump them on the market because everybody was afraid that it would destroy the market. So they're going to hold those indefinitely until they come up to fruition or whatever. They're going to hold those all the way. So they don't have to exit out of anything. They just stop buying more. But what's funny is, everybody thought they were going to talk about, two-thirds of analysts thought they were going to be scaling back on QE. And they've literally now basically increased it by 50% this week. So $40 billion. That's a month's worth of QE in the Treasury market done in, a few days. So, anyways, but just some for you there. Hopefully that'll help you out. And let's see. We got a couple other things over here. Let me move this out of the way. Close that one down. Bring this up. Okay, so now let's go ahead and let's check out as to where the markets are going across the board here. We had that gap fill there. It looks like S&P might be trying to push down. Now, this again, the goal is not for them to make the market fly up. So don't get this opinion that, this means the market's going to be up every day. The goal is to prop the market so it doesn't fly down. Okay? That's the main goal of QE. And then, of course, if it's not flying down, if you can stunt the down days and get the up days, then you're going to have, obviously, a bullish market. Okay, so let's see what we have over here. We got the S&P. Looks like it's just bouncing right down. May move back down to that gap. We might get another gap fill. We haven't officially had a gap fill, even though I counted it's within a few ticks there. We haven't officially had a gap fill at this point, even though the gap fill trade was profitable. So let's check out the Nasdaq. And then scroll on down here. Yeah, what happens when the music stops? That's what everybody's guess is right now, right? So, bring this chart up. Make sure I have no drawings on here because it can make everything have to refresh like crazy across the board. It gets a little bit annoying on the charts. Let's see. There we go. Okay. So right over here we see we got a full deviation move up on the Nasdaq. It's the one that has not even come close to filling its gap yet. But day's not over, right? So we got to move down to about half a deviation, pop back up to one again. Look at that perfect one deviation move. We expect that 70% of the time. Now it's moving on back down. We'll see if it can break below the half deviation or not. If it does, we may get a half deviation down day across the board on the other markets. Let's look on over at Russell. And over here on the Russell, what we got right now, just looking at the highs to lows. I know it takes a little bit to refresh over there. Give it a second. And up to 0.7. Then all the way back down, we got the full gap fill on the Russell this morning. Moved back up to 0.5, bouncing like to the tick off of a half deviation. And if you're new, if you haven't listened to the show before, what are the deviations? The deviations are based on implied volatility. That's why they're so insanely accurate. It's not a pivot level. It's not a fib level or anything like that. And even though fib levels can be really good if you use them the right way. But what's cool is when you combine this with fib levels and you get confluence because they both line up. But this is literally the implied volatility taken out of options price, where everybody who is in the market is saying how far the market will move. That price put in and displayed on the screen for you there. We have the deviation levels right there in the diagnostic area. And so it lets you really know where turning points are going to be, where pivot levels are going to be, where entry points could be, where trailing stops could be. There's a lot of ways to use them. So any way you use a pivot level or a fib level, you could use these. Except for you're going to get just some insane accuracy with literally no work. If we go over here, we go down to check out the go here, check out the Dow there. I think I had that one up already. Yeah, we already had that one up. But Dow had a nice move. So we got NASDAQ, we got S&P, we got the Russell. Okay, yeah, it's just the charts are taking longer to load this morning for some odd reason. Never know why. But anyway, so the Dow, we got the 0.7, 0.5. I didn't cover that one. We're about 2 ticks off of the settlement price there. So it's trying to come on back down. It might be able to reach it. It hasn't had a true gap fill, but again, the gap fill trade worked. If you use the rules I talked about, gap fill trade was profitable this morning over on the Dow. Now, how's this affecting gold? Right? Maybe you're a gold trader. Let's go and check it out. Let's see if there's any kind of pattern. Now, honestly, I haven't even dove into it yet. I've just been so focused on the indices and taking advantage of it with the indices. But again, you need to look at this. Look at that chart that I posted up there in the room, and look at the days that it comes out, and look at the quantity. I mean, because some days, these are massive purchases that are happening right now. But look at the quantity and look at times today and see what kind of consistent pattern you have, and make sure you do have a news calendar up so you can see if there's any significant impact of that as well. But gold today, 10-15, boom, thing just flies down, and we had to move down to 1 deviation. Solid 1 deviation down. Look at that, like pretty much to the tick. Perfect move. And so let's go back over here, and we can look at previous days, and we can see just how, again, it's impacted it each day with the moves on the market. And basically, we see it violent moves right around that time. And again, we're seeing the 10-15, boom, fly up. And that one actually blew past the 1 deviation. And so you can go back and you can look at each one of these. I think you're going to see the most consistent impact in the equity markets. Let's see here. We go over here to previous day there, and we see 10-15. Doesn't really get an explosive impact. At the end of the day, we got a big move there. That was Fed, though, so that closed that one down. But, just go through and check out each one of them, and you'll be amazed how much you can pick up off of it. And let's see here. Let me load template up. I think I grabbed something I wasn't supposed to. And all right. Let's check out where our energies are at, too. Go into those and dive into them. Check out the energy sector, the oil and natural gas. And there it goes. Okay. Let's look at that. I'll pull it up over here on the other screen. I want to show you where you can get the deviations and how to use them to impact your trading. So we'll talk about that a little bit more when we get back from this break. Stay right there.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, Darrell Martin right here. Welcome on back to the Diagnostic Trading Hour. And so I got an oil up here for us right now. Just looking at it. Again, you can pull up any one of these markets, pull up any one of these charts, you compare the deviations. Where can you get the deviations? Again, inside the scanners there, right over there on the homepage of TFNN, you can get access to it. And just click on deviations at the top. Now, a trick I showed with some traders this morning that can be really helpful too is you can go in and you can use out-of-ticket window features. Like right here, you can go open, link in new window. And then you can resize the window to fit where you want it to, so that way you can monitor any open positions that you have, and you can pin that on top of your charts or on top of anything. So you can basically keep this thing live and open all the time with your live and demo trades, so you don't have to take up a whole screen like in the Nadex platform or in the scanner itself. And just a really, really helpful, easy way to do things whenever you're trading. So highly recommend that you use that feature, so that way you don't have to scroll up and down every time. Especially like, let's say you're looking at, something like, over here on, we'll say Forex, and you're looking at a few pairs, and you go through. You're scrolling way down analyzing, and then you got to scroll all the way back up to see where your current positions are. It can make you a little nervous. So if you'll use that right click, open a new window, and then you'll resize the window and pin it on top. So that way, it's always there and accessible for you. It makes it a really, really easy way to keep track of your positions. Let me see here too, and I'll post a link over here for you. Give me 1 second. I'll pull this up. It's a really helpful little program. It lets you pin charts, or it lets you pin things like browser tabs, whatever, on top of your windows. And so let me pull that up, and I'll give you the link. It's a free little program. Really useful. And let's see here. There it is. Okay. It is called, for those that are listening, it's called Filebox Extender. But like I said, I'll post that link in the room for you, and you can use that. And but yeah, just open that up, and then like I said, right click, open a new window, and resize the window. And then of course you can also zoom, because you may end up, you have like 10 or 20 positions on, or 5 positions on with working orders on all of them. It can get sort of big. And so if you go down here and you're inside your working, you can go in and you can zoom out, Control minus, zoom in, Control plus, reset, Control 0. And you can't remember all that. Just the setting tab right up here in Chrome actually has a zoom built into it for you. So you can zoom right from that, so you can fit more information. Because it's not like you need to see like super big detail, okay? You just want to keep an eye on things. So you can use that, you can resize that, so it doesn't have to take up your whole screen just when you're trying to monitor a couple positions. And anyways, little thing I like doing that we talked about was, I talked about some other charts last night and this morning, and just want to share that one with you. So, but yeah, cool program, and like I said, it helps you pin things on top. I also like it whenever I'm doing maybe like the out-of-ticket windows. I'll have something open like this right here, and then I'll use this to pin it on top, so that way I don't lose it when I'm scrolling around and clicking on things. And I keep that ticket up for when I'm watching it potentially executing, or maybe I'm managing a stop. That's how I'll have that up. Or if I'm going to have a stop entry, I want to be ready. I'm going to get into it. When it gets to a price, I want to have that ticket up, open, and ready. I don't want to have to click and wait, and the market moves way too fast, and I'm not able to get into the trade. So a couple little tips for you. But anyways, I hope y'all learned a little bit about the bought and buying program. Dig into that news story I gave you. Dig into the chart I posted up there for you. And look at the markets that you like to trade. See if you see any patterns over the last few days, and even over the last 18 months, because all the numbers are there for you, all the dates are there for you, and you might be able to see a little bit of a trading system. Sign up for the email alerts over on the New York Fed's website. Have them forward to your cell phone. Then when that happens, you can be aware of it. You can see the pattern of the day of and the day after any one of those announcements is made, and how that can help you in your own trading. I hope you all have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned. Another great show coming up for you right after this.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.